Good afternoon. Can everyone hear me? Can you hear me well? Okay, excellent. Um, so good afternoon, everyone, and welcome to another great event from the School of Global Business and our new Business Innovation and Technology Center, the BIT Center, where I'm actually here at and we're broadcasting from. On behalf of MDC, the School of Business, and the BIT Center, I would like to thank you very much for attending today, and a special thanks to the organizer of this event, our director of the BIT Center, Chechu Lacheres, who's working behind the scene as I speak, along with our media group to make sure that our event here goes well. I would also like to thank the tireless effort of our event moderator, Mr. Alvaro Morales, and the amazing panelists that we have partnered with today, Israel Hernandez, Ramon Martin, and Carlos Domingo, who will be introduced to you quite shortly. In the past few years, the School of Business has embarked on a complete review and revamp of our program. Many of you might already know that. And we collaborated very closely with industry to ensure that our programs are providing students and our community with the most required and needed skills in the market today, which is much needed now than ever before. A great example of that is the Future of Finance event that you will be seeing today, and also our new program in wealth management that Dr. Anna Cruz will be talking to us shortly. Those were, both of them were created in collaboration with industry and in partnership with our long-term partner, the Center of Financial Training here in Miami. With that, I would like to introduce Dr. Anna Cruz to talk about our new program, which will be offered very shortly in the Wolfson campus. Thank you again for being with us today. Please stay safe. Dr. Cruz?
Thank you, and good afternoon. I'm excited to be here to provide you a little bit of information about the financial services programs. Basically, we offer two programs, one in banking, and the second one is wealth management, which is brand new. This is the one that I'm going to describe today, since we would like for you to be part of the launching of this program. This associate in science degree has 60 credits. And as part of the 60 credit, we have technical classes that were developed to meet the current trends in the industry. I worked closely with faculty, the Center for Financial Training, and industry experts to create a program that would provide students with sufficient knowledge to work in this field and be able to sit for the Securities Industry Essential, SIE exam. Throughout the development process, industry focus groups and individual meetings played an important role in the development of the program, because we wanted to make sure that the students were ready to be employed by industry after completing their degree. To simulate the real world in the classroom environment, we're using case analysis in these courses, as well as Bloomberg, for the students to access Bloomberg Data Service, which provides real-time global financial data and news. These Bloomberg terminals will be located at the BIT Center of Miami-Dade College. And I want to say that so far, we did a sample last term by incorporating Bloomberg in a couple of classes, and 35 students earned the Bloomberg certificate. We're very, very proud of this. And I must say that we're the only college in Florida that has this type of program. And the students, as well as the employers, should take advantage of this opportunity. Now, you're seeing the classes on the screen. And I'm going to mention just a few of them. I'm going to start with fundamentals of wealth management, institutions, markets, and products. And then we're going to have also investment in stocks and bonds, financial analysis and valuation, financial planning, risk management and compliance. As you can see, these are very robust courses to make sure the students acquire a solid foundation and can compete in today's world. Basically, that's our goal at the School of Global Business. Now, I'm going to have the pleasure of introducing Ms. Connie Laguna, President and CEO of the Center for Financial Training. also known as CFT. She has lived in Miami for the past 55 years and has been active in numerous community development and professional groups locally and nationally. Ms. Laguna has undertaken extensive outreach and research initiatives within our community relative to financial education literacy, management, and microfinance. Ms. Laguna, please join us.
I believe we're waiting for Connie to join. There it's Connie.
I am sorry, I had a little bit of a technical difficulty. Um, Good afternoon, everyone, and I'm very excited to be here today on behalf of the Center for Financial Training and Training for Good Miami-Dade College. CFT is the education arm of the American Bankers Association, and we have been working very close with Miami-Dade, as Dr. Cruz and Mariana was identifying, to bring up to date with our degrees, to make them relevant to the industry, for our students, for our professionals. So we're excited about the new programs, the revised banking, and the new one in wealth management. With that said, the Center for Financial Training has been in partnership with Miami-Dade for many, many years, and we work closely with all these financial institutions to not only bring the most relevant but practical experiences to our students, but also to our professionals. I have the pleasure today of introducing Alvaro Morales. Alvaro is the founder and executive chairman of the Flanks, a European wealth tech company, and is helping several financial institutions into their digital transformation. He is a firm believer in the new digital era of finance. Alvaro is former CEO of Banco Santander International, where he was CEO since 2009 to 2019 recently, and he headed global of private banking from 2016 to 2017. Alvaro has been in the industry for over 28 years and has been managing and part of being CEO and board member for several banks in the US, the UK, and Switzerland. Alvaro graduated as an industrial engineer from the Polytechnic University of Catalonia. He holds an MBA from IESE, an advanced certificate for executives from MIT Sloan Business School, an international financial analyst, and a diploma of advanced studies from the doctorate program from the University of Barcelona. And Alvaro, I hope that I did well in reference to, and I thank you for being here with us today. And please, I turn it over to you.
Well, thank you very much. Thank you very much, Mrs. Rana Shihara, Ms. Connie Laguna, and Dr. Ana Cruz. It's a pleasure to moderate this webinar about such an exciting and innovative subject. I want to thank Chechu de las Heras and the Business Innovation and Technology Center for their valuable work, as well as for this opportunity. Today, we are going to talk about the future of finance. We're going to talk about fintech. Most of the audience, if not all, are familiar with this word. Fintech is financial technology, a digital revolution. It's about significant changes to the value chain of the financial industry. Fintech is disrupting the financial world as we know it. The financial industry is now more focused than ever on technological innovation. There is a battle. Fintech firms and established banks are both fighting to take their share of the financial services market. While fintech firms enjoy lower operating costs and can more quickly react to the consumer needs, banks and large financial institutions still own the customer relationship, loyalty, and a profitable P&L. And this is very important. But until when? Until recently, the financial industry has been considered as being the sector slowest to follow innovation. Time is putting pressure on the establishment, and weights could change very rapidly. It is crucial to understand the technologies shaping the future of finance and who is currently adopting and driving financial technology innovation. It is essential as well to understand the potential partnerships among incumbents, startups, and investors. As you can see in the slide, some of the most relevant application of fintechs are mobile payments, money transfers, robo-advisors, cryptocurrency, online lending, crowdfunding platforms, digital onboarding, including facial recognition, digital signatures, compliance tools, digitalization and robotization of administrative tasks, blockchain, budgeting apps, etc., etc., etc. And this picture is growing and changing every day. Next slide, please. Next. Well, tons of money is coming to the fintech industry in the form of financing or M&A deals, allowing startups to equilibrate their lack of profit. We can see in this chart, this one, okay? We can see in this chart produced by FT Partners that the volume of M&A deals in the fintech spectrum raised to 233 billion in 2019. 233 billion. This amount is twice the current capitalization of BNP, the French bank, Deutsche Bank, UBS, Lloyds, the British bank, and Banco Santander all together. Next slide, please. However, it is not just M&A deals. Last year, the financing volume added to this figure another 44 billion in financing. Next slide. Half of it is from North America, 28% from Europe, and 17% of Asia, no? As expected, no? Next. Moreover, more than 50% of the financing deals with have a size of less than $10 million, helping relatively small companies. Well, it could seem a nightmare for some industry CEOs because the fintech revolution forced them to a digital transformation. A digital transformation that is not well accepted by these large corporations. The immune system of these companies, which generally protects them, is now avoiding the change. It's very difficult to innovate in a large bank, in a large corporation. However, for those who succeed, it will become a huge opportunity to win efficiency, reduce the dependency on expensive branch networks, and create a competitive advantage. Fintech is here to stay, and we are here to listen to three experts on the field: Ramón Martín, Carlos Domingo, and Israel Hernández. They will share with us their view in three relevant, important areas. Let's start with our first speaker, Ramón Martín. He will talk about the future of payments. Ramón is the founder and CEO of Metaphor, a network of independent advisors and consultants. Ramón has more than 30 years of experience in payments. He is the former global head of merchant sales and solutions for Visa and CEO of CyberSource. Previously, he worked at American Express for 17 years, where he held several global senior roles. I want to stress his current role. Over the last 2 years, Ramón is leading for American Express the launch of the first foreign payment network in China, one of the most significant cross-border fintech projects. I am absolutely sure that we will hear about this project very soon. Ramón, the screen is yours. Thank you.
Álvaro, thank you very much for the introduction. Really, thank you very much. It's a real pleasure to be here, and thank you to the MTC and the school for inviting me to this one. What we're facing today is that hundreds of millions of people are jumping to digital payments. All of this forced by the pandemic. What happens is, for many of them, this is the first time they're doing it. And this is transforming how consumers, businesses, governments, even criminals are moving money. But I'd like to start with an important fact. As much as we think on fintech and digital payments, the reality is that today, 8 in every 10 transactions are paid in cash. This is about $50 for every 100 that are paid in the world is paid in cash. If we look at the US, that's about 80% of the consumers will use credit cards for their everyday spends, but outside of the United States, the situation is different. And we'll cover some of that. Cash is fundamental for the over 2 billion, with B, 2 billion people around the world that are unbanked. Although cash, it is a really expensive proposition. It's about 1.75% to 2% the cost of managing cash. This has created a unique opportunity where the entire fintech community is responding very rapidly. The reality is that the starting point and adoption was different by region. If we take Africa, cash is still the predominant payment instrument. If we look at Asia and some of the Northern European countries, it's digital payments that have been around. But let me give a couple of specific examples. India, okay? Over the years, the Indian government has been trying to turn smartphones onto ways of introducing to the formal economy. And actually, in 2016, they introduced what is called the demonetization initiative, which basically is taking the $20 bill out of circulation. That in India represented about 86% of the country's currency was removed from circulation. That has pushed tremendously the adoption of digital payments, obviously accelerated now with COVID. China, and I'll come back to China a couple of times through my conversation, is the global pace setter for QR-based payments, which actually is a blueprint for developing markets in terms of how to turn popular applications and wallets that are residing on the phones onto payment tools, both to initiate as well as to receive the payment. Brazil is another example, this one in our region, that it's a bit different. And in this case, the government has worked to remove a long-standing duopoly, and it's actually now opening tremendous opportunities to drive payments competition. I talked about Africa being the region in which cash is most widely used. We have examples in Kenya, and I'll mention that a bit later as well, in which companies are leveraging utilities, and in this case, telecom access, to build financial services and provide access to the millions of people that don't have financial services otherwise. What we do see is that cash transaction volumes on a global basis are still increasing as commerce increases in absolute terms. But electronic payments is increasing a lot faster. We should see, before the end of this decade, the first cashless nation. And it will be most likely Northern Europe or Asia. If we look at some of the forces behind and actually move to the next slide for a second, what we'll see is that throughout the last few months, consumers have been forced to adapt to new technologies. And it's been said, I don't know to what extent that is a correct statement, that what would have taken 2 years of adoption happened in 2 weeks, or 5 years in the last 5 months. Consumer education has moved 100 times faster than it was before. And this has provided unique opportunities for fintech companies to look at ways to reduce friction on payments. And by doing that, supporting a rapid scale of adoption. In this, I'd like to talk a bit about social media, because social media has proven to be extremely successful on transforming the speed of change and adoption in many parts around the world. And I'd like to use the example of China, where, as Alvaro mentioned, I've been working for the last 2.5 years. in this particular market, there are two wallets that represent about 90% of the overall volume. Just to get a sense of magnitude, the online payments in China, as we see in the chart, represent about 10 times the one in the US. So 10 times the size of the market. These two wallets that I alluded, Alipay, part of Tencent in one of Alvaro's slides, and WeChat are and have been the ones creating the market. Alipay, which was the equivalent to PayPal, was the dominant player, but WeChat, equivalent to WhatsApp, came up with a really smart gamification strategy and actually moved in a matter of months from 30 million daily users to what is now more than 900 million daily users for their payment facility. Okay, in this case, payment is fully integrated into the overall ecosystem. But what is more important, in addition to the money they make for every financial transaction, is the immense amount of consumer data they are gathering. And we'll hear Israel talk about it later. But this is becoming to be a really interesting environment in which they're using this consumer data to constantly innovate and launch products. A lot of those within the financial sphere. We see similar trends around the world, and anyone reading the news, you might have heard that WhatsApp, part of Facebook, for example, is working on new connection tools for businesses that will certainly improve the relationship with consumers, but also with merchants. In this case, both India and Brazil are the focus markets. I mentioned earlier about Kenya and how they're using telephone infrastructure. An interesting example there is Airtel Money, another wallet that in this case is using talk minutes, is actually using that as a currency that facilitates commerce for unbanked regions. When we come back to the US, we have, whether that's Apple, Google Pay, Samsung Pay, they have massive existing user bases that the reality is they could easily integrate into a number of additional functions, whether that is P2P payments, social messaging, loyalty. We see some of that, and we now see the profusion of Instagram testing their click to buy facility, as well as many other networks. Taking that to one extreme and in slightly different spectrum, but Facebook has made and is currently working on establishing a new cryptocurrency that they try to make as the cryptocurrency, the global cryptocurrency. But the business opportunities that are emerging are huge. And actually, if we move to the next slide for a second, which will be my last one, actually. We are facing a connected economy. When we look at the numbers around the world, there's more than one phone per individual over the age of 15. There's actually 102 phones per every 100 people around the world that are connected right now. This is tremendously transforming to what was an offline and face-to-face environment to what is now an online, in many cases, longer distance environment, and moving from the traditional retail, what is now described as e-tail. This impacts the way in which we pay and we integrate payments. Let me talk about a few examples. Wearables. A number of you in the audience will probably have one of those health tracking devices. So think about how that could influence the way in which you pay your health insurance, because it's gathering information about your health habits. And by doing that, you could get a better deal. Or smart speakers. There's nearly 500 million smart speakers actually connected right now in the world. And within the next 3 years, in the US alone, there will be close to 200 million speakers. That will be a tremendous amount of connected devices. Actually, if we go broader than that, if we look at the overall presence of connected devices at home, we have over 1 billion of those connected. Think about your lock, your smart TV, and how those create business opportunities. In addition to my washing machine deciding that I've used it and they need additional soap, or the one example you have on the slide, a device that reads the pH of the water, decides the quality, and then orders new supplies. This is bringing data management, identity validation, a tremendous amount of new opportunities for fintech. The last point I'll make, this digitization is moving deep into the industries and the governments. And we have examples like Sweden with the e-corona, or even in the US with FateCoin, or China, Russia, Canada, and the Netherlands that are working on using, well, that's distribution ledger technology or central bank digital currencies that will further penetrate these digital payments in the world. So I'll close with this notion of everything we are seeing is just the tip of the iceberg. Tremendous opportunities still today, 8 in every 10 transactions happening in cash. Alvaro, back to you.
Okay, thank you very much, Ramon. Some takeaways from Ramon's presentation. He shared with us his views about the future of digital payment, especially how digital payments will replace cash, and especially the example of China. It's a good example of what is going to happen in the future. Very interesting, the growth of wearable becoming a tool for fintech and also for digital payments. And the role of the broader digital ecosystem focusing on social media. Thank you very much. Our second speaker is Carlos Domingo. He will help us to have a better understanding of blockchain. That is not the same as Bitcoin, and he will explain that. And also the impact of blockchain in the finance world. Dr. Carlos Dominguez is the founder and CEO of Securitize, the leading blockchain-based digital securities company, and founder and managing partner of Spice VC, the first fully tokenized VC fund on the blockchain. He has developed different senior roles in technology. Among them, he was the president and CEO of Telefonica R&D, co-founder and board member of Weira, one of the largest corporate accelerators, and CTO and CEO or board member of multiple tech startups in Japan and in the US. He's a very well-known startup investor. Carlos holds a Master in Computer Science from Tokyo Institute of Technology, a PhD in Computer Science from the Polytechnic University in Catalonia, and postgraduate Business Studies from Stanford. Carlos, thank you very much. You have the word.
All right. Thank you, everybody. My name is Carlos Domingo, and thanks to Checho and Alvaro for the invitation. What I'm going to do is, before starting with my presentation, I want to show you a video. It's a very short video. It's like 1 minute that talks about, he's a very famous economist. And usually when I give this presentation, I ask people to try to guess who it is. Unfortunately, now we won't be able to do that. But you know, it talks about one of the missing pieces in the internet that kind of links very nicely with the discovery of cryptocurrencies and Bitcoin. So I'm going to share the video here, and then if someone can please can you put the okay, so the video is there. Let me just make it bigger.
So that I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet. Of course, it has its negative side. It means that the gangsters, the people who are engaged in illegal transactions will also have an easier way to carry on their business.
All right, sounds good.
Hello, I hope you are enjoying this exciting seminar. And I think we are transitioning to Carlos very shortly. As you see, we are broadcasting from the Business Innovation and Technology Center, where we will have all these exciting
I'm back
programs
here.
for you when you join us. And there's Carlos with us here.
Yeah, sorry. When I switched I turned off the video, it turned off the browser, and I lost the connection. Sorry. This application doesn't allow you to share a video with audio directly from PowerPoint. So this morning we had to go through some hoops to figure out how to do it. So let me go back to my presentation here. And apologies for the. All right, so I think we have it here, so it's good. So we heard the video. So the person in the video is a person called Milton Friedman, which I'm sure everybody probably has heard of. He's an economics and Nobel Prize winner, and he actually recorded that video in 1996, which is very remarkable because at that time internet was starting, and internet, as you guys probably know, even if you're not technical, it's just a set of protocols that allow people to share stuff on a peer-to-peer based on the internet. You can share data, you can share voice, you can share files, you can share email, etc. And then what he was saying, which is basically what happened later with cryptocurrencies, is that there was a missing protocol that would allow you to share money directly between people the same way that you share cash. And this peer-to-peer money transmission is basically what Bitcoin is. So Bitcoin was the first cryptocurrency. It was invented more than 10 years ago, and has started a big, financial revolution because, as is mentioned in the video, it allows basically to transmit money and cash directly over the internet without any intermediaries. Now, the most remarkable thing of Bitcoin is not Bitcoin itself, but is that Bitcoin is actually supported by a technology called blockchain, which is basically this technology that allows this, peer-to-peer, trustless exchange of value. So blockchain basically is very difficult to explain what it is. So I'm just going to be very generic here, and there's a nice, definition from Don Tapscott that wrote a book about blockchain a few years ago. It is basically a distributed ledger that is cryptographically secure. So basically every transaction and every record of that ledger cannot be tampered with or cannot be modified. That allows people to basically transfer that value. And what people basically have discovered the last few years is that, besides creating cryptocurrencies and creating something like Bitcoin, you can also create all the type of assets that represent value, and you can transfer it securely to other people without, financial service intermediaries, which is the way that it actually works on the financial services system. So basically, what blockchain is, just to give you like a very broad view, is a way to move from an internet of information, which is where we are today, where we can share video, we can share, documents, we can share email, etc., to an internet of value, where you can actually share things that represent value, whether it is money, whether it is securities, intellectual property, any type of financial assets, bonds, stocks, futures, etc. So it's kind of like the next generation of internet, and it's a new protocol and new infrastructure that is emerging that allows the transfer of value in a secure way, if you want to just think of one particular definition. All right. So why is this relevant? So let me give you an example of how financial services work. So what you're seeing here today in this slide is basically a representation of the number of actors that participate on a bond issuance. So when an issuer, let's say the bond on the left, wants to issue a bond, let's say the Treasury Department of, I don't know, a large corporation like Apple or IBM, they have a number of departments that get involved into taking the decision about the issuance of the bond, and they basically work with broker dealers, which is the bolt on the far right, that again has their own departments, etc., that they basically work over a trade screen and they agree on a trade. And then when the trade is agreed, the broker dealer has to basically offload the bond and sell it to investors, which are the ones that actually end up holding the financial asset. And the investors again have their own departments that they work with to achieve this. And then in the US, there is other entities that participate, which is Federal Reserve. If there is cash involved, Standard & Poor's to put a credit value to the bond. DTC, which is a central depository that basically records the transaction and settles the exchange of the bond versus cash. And then other people like Bloomberg, that people use the terminal to communicate with each other to determine a trade. So just to give you an idea how complex a trade is, so this is when you want to trade a bond today, this is what happens. So all these arrows means interactions of people back and forth between them to basically agree on a trade. And as you can think of this is very complicated. And to make this work, there is a lot of intermediaries, like issuing and paying agents, custodians, even broker-dealers are to some extent intermediaries, because you could theoretically sell directly things to investors without broker-dealers, the clearing house, et cetera, et cetera. So this creates inefficiency, creates additional fees, it creates reconciliation errors, because everybody has their own databases where they record their own information, which sometimes doesn't match what other people have, etc. So what blockchain brings to the table is a better way of doing this, which is the following: instead of people talking to each other, people work on the same ledger. So this circle around here is a ledger that is distributed, meaning that everybody has a copy of it, and everybody reads up the same data, and that every node represents a different actor that participates on a bond issuance, which is obviously the same actors we saw before, but organized in a different way. And then when the bond needs to happen, is as simple as, the different nodes communicate with each other, they agree on the terms, they record whatever interaction has happened on the same ledger, that everybody accesses the same data, there is no errors, there's traceability about what has happened, and then you execute the trade involved, the broker-dealer with investors, etc. I'm not going to try to explain you how it works, I just want to give you an example of how this looks like, and so forth and so on. So this is the how blockchain facilitates this type of financial services products. So in other words, you can think of the left side is what today works with centralized ledgers, where the issuers, the banks, the broker dealers, the investors, the clearing house, etc., have a ledger where they keep a record of whatever part of a transaction they see, and then to make sure that centralized ledger is correctly updated, and at the same time in other places, there is a lot of intermediary systems. And if you want to think of another simple example, when you send money internationally, the only reason why it takes 2 or 3 days is because there's a number of databases of different banks that need to settle the trade. So they need to consolidate it, and they need to say, okay, the money left this bank account and arrived to this other account, and in the change currency and things like that. And those are inefficiencies, even though it's all already digital, because there's no real money moving. Just to make sure that there is no double spend and double counting of things, and all the ledgers, reflect the same result. What they do is they take time to do it. They use outdated systems. The systems, don't synchronize in real time, etc. So what blockchain promises, and this is the only idea that you have to, take out of this, is that when you have a situation like a bond trading, for instance, where there is a lot of different, parties that participate on a transaction, because the issuer needs to record the fact that he's selling debt. The broker dealer needs to buy a portion of that at a particular agreed price, and then he has to sell it to an investor, and then the investor needs to receive the coupon of the bond and things like that. What blockchain promises is a way for all of these entities to collaborate on a distributed ledger that is cryptographically secured. In other words, that cannot be manipulated by any of the actors and is not controlled by any central actor, where the same information gets recorded and updated in real time for everybody to see and collaborate. And that obviously has tremendous efficiencies. In this scenario on the left side, where you have centralized ledgers, things don't settle in real time. By settling means the actual change of ownership of the bond versus the cash of the people paying the bond. When you pay a dividend, the dividend doesn't get to investors in real time, and it takes some time to do it, because sometimes the issuer doesn't even know who holds the bond on the investor side, and things like that. And all those inefficiencies create a lot of friction in capital markets. You have counterparty risk, you have things that don't settle, you have reconciliation errors, etc. In this scenario on the right side, where you use distributed ledger technology or blockchain, basically all those things can happen in real time. There's no errors. Everybody reads the same data. Everybody updates the data and gets reflected in their own copy of the ledger in real time, etc. So it creates an extreme, efficiency. It frees capital, because you don't have to hold capital waiting for a settlement to happen. It eliminates counterparty risk, because once you agree on a transaction, it settles in real time rather than waiting 2 or 3 days, where something can happen in between, etc. So this was a very fast summary of blockchain. Is a very complex topic, so I just wanted to give you one particular example so you visualize a little bit the potential of this technology to basically revolutionize how capital markets work today. Thank you.
Thank you very much, Carlos. Very interesting. Some takeaways of Carlos' presentation. He talked about the power of blockchain as the next generation of the internet. He gave us some example of blockchains used in finance, bond issuance, trade execution, and settlement. At the end, he stressed the fact that blockchain provides safety to any transaction in the internet. Thank you very much. Then, last but not least, our third speaker is Israel Hernandez. Israel, we talked about artificial intelligence and the use of artificial intelligence in the computer engineer from the Instituto Tecnológico of Monterrey, Mexico. In 1998, he co-founded IDEA Corporation. In 2005, he started a company called Punto Clave, a disruptive fintech company specialized in electronic financial transactions like credit cards and EBT programs. He sold Punto Clave to a French company. This exit was so successful that in 2015 they got the award to the best VC transaction for Amex Cap, the Mexican Association of Venture Capital Funds. But he didn't stop there, and in 2018, he and his brother Omar decided to begin again incorporating M3, Investment and Technology Incorporation, a fintech startup, and they has developed an algorithm trading and investment platform that, using artificial intelligence, wants to disrupt the financial industry. Israel, as I have mentioned before, is going to talk about how artificial intelligence is changing the landscape of finance, of the finance industry. Israel, the screen is yours. Thank you.
Thank you, Alvaro, for the introduction. Thank you to MDC and especially to BIT Center. As Alvaro said, my name is Israel Hernandez. I'm the co-founder of M3 Trading platform. We are here in Miami. So let's begin with a question. Next slide, please. Next one. What do these companies have in common? Amazon, a retailer, Tesla, a car manufacturer, Netflix, video streaming, MasterCard, payment processing. What do all they have in common? Next one, please. They are using artificial intelligence. And here we have these four examples. Amazon, drive its product recommendation. Tesla, it's training self-driving cars. Netflix, do you think that you select your movies? No, they recommend the content tailored to each user. And MasterCard, as one of our previous presenters was saying, fraud detection in real time. Next one, please. So how is AI changing the fintech industry? We are not going to review each of them, but basically I put here 5 examples. Basically, credit decisions, for example, managing the risk, quantitative trading. Now you hear that everybody is trading using algorithmic platforms, or they are trying to find the new next algorithm. So quantitative trading, personalized banking, because nobody is the same. So we want to have different services, different times. Cybersecurity. Someone in the chat was asking about fraud. Yes, with AI we can detect fraud, because if you, for example, are spending your money only in gas stations and restaurants, and for any reason the acquirer receives a transaction from a different merchant category, it may send you a message to confirm that you are there, that you are spending that money. Next one. So what's maybe you're thinking, okay, this is only for big banks, as Ramon said, or they are not doing anything at all. First, we'll talk about the startups. This fintech industry, as you can see, now we have a lot of startups, and you can divide into different segments from, as we said, scoring to trading to market sentiment research, like, for example, analyzing natural language processing, what the investors are saying, if they recommend to buy or to sell a company. So this is a small picture of the AI in fintech industry. And you can look for it in internet. There are many graphs about the landscape. Next one. But maybe you're thinking, hey, okay, Israel, but this is only for the big banks, for the people with money. No, not at all. We have a very clear example that now you can use these products as a consumer. Why? Because now there's the first ETF that is managed only by artificial intelligence. It's called AIEQ. You can buy this product in any exchange with your broker account. And basically, this ETF is managed by IBM Watson. Maybe you have heard about this product from IBM that is specialized in artificial intelligence. And it's mimicking almost 1,000 research analysts that is looking and finding trends to decide which stocks to pick and to invest. And now it's packaged in a consumer solution. That's why you can buy it through your broker with the ticker AIEQ. So this is a real product, a consumer product that you can use, and now you can say that you are using AI to decide your investments. Next one, please. But where are we going from here? Okay, as Business Wire report, and as Alvaro and Ramon said, the industry is growing like crazy. For 2025, Business Wire predicts that the fintech industry is going to worth around $22.6 billion. Big banks on the right side, JP Morgan, they say that they are taking advantage of these AI initiatives in 6 specific areas: virtual assistants, anomaly detection, news analytics, quantitative client intelligence, smart documents, and intelligent pricing. And obviously, now that you have heard this buzzword called quants, people that combine analytics, that combine artificial intelligence, computer science, so you can combine financial knowledge. So you can combine all of these, and what do you get? You get a quant. And basically, with these strategies, the banks are reducing risk and taking emotions out of investing. And these are only 3 examples of what we are watching in the industry. Jim Simons, for example, AQR Investments, and Sigma, 2 Sigma. It's all of them are hedge funds, and they are using AI to select stocks and to invest in the market. Next one, please. This is only like a resume about the industry tomorrow. Where is it going? But basically, as I told you, machine learning and natural language processing, what is called NLP, are the key drivers. Those are the 2 most important technologies right now in artificial intelligence for the fintech industry. Blockchain, obviously. So in the next months and years to come, you will hear a lot of how AI is disrupting this very, very, very old industry called banking industry. So thank you very much for your time, and we'll go back to Alvaro. Thank you.
Israel, thank you very much. 2 takeaways from Israel's presentation. As we can see, the use of artificial intelligence in the financial sector is here to stay and disrupt the industry. Second, the computing power currently available allows anyone access to tools previously only for large company. And finally, for parents who are watching us today, likely your children's job has not been yet created. Okay, now it's time for Q&As. I invite all the speakers to join this Q&A session. We have received some questions from the audience. The first one is for Ramon. Ramon, what is your perspective on the intersection of digital currencies and payments?
It's a really important question that I'm sure that Carlos will also have something to say about it. It's clearly creating an opportunity. Many see challenges, and actually there was a question in terms of what would it mean for the under economy movement and so on and so forth. It creates an opportunity in many fronts. First of all, the underlying technology. The distributed ledger technology can change the way in which cross-border transactions happen today, which has been working the same way for the last 50 years, and there's a tremendous opportunity. Second one, certain types of cryptocurrency become to be another currency in the portfolio. And similar to the way in which a transaction happens in Japan, where you pay in yen and you settle in US dollars, this could be with digital currencies. So the core opportunity is that expands the business for payments, both in terms of underlying technology with DLT, as well as the volume coming new transactions into the system. A tremendous opportunity.
Can
Thank
I
you very much.
here?
Yeah, please go ahead, Carlos.
So look, the answer is I don't know, but I'm going to tell you what the opportunity is. So if you think about when music got digitized, at the beginning we went from buying LPs to buy CDs, right? And a CD was a digital version of an LP, but fundamentally nothing changed, right? You just got a very smaller form factor, but you were still buying 12 or 10 songs in an album and going to Virgin Megastore and buying a physical CD that you play digitally, right? So, and then suddenly, because when things are natively digital, new things happen that people don't predict. So then people start realizing you can then, store all your songs in an iPod and have thousands of songs. And then the next thing is that, well, you don't have to buy 12 songs, right? You could just buy the song that you like, and you could buy individual songs over the internet. And then the next thing is you actually don't have to buy the songs. You can just stream them in real time, and that's it. So, to attempt to answer what's going to get changed with cryptocurrencies or blockchain, it's very, I don't know. It would be very pretentious for me to pretend to know what I know, but what I know is that when things have got digitized, there is always new business models and new usages that completely disrupt the current status quo. And I think this is the message that especially the young people in the audience need to think about it. This is a big opportunity because you guys can then now think about things that all of us, which are, old, too old to see things differently, don't see it. But when things get digitized, magic happens and new applications happen and new usages, and I'm 100% positive the same thing will happen when we digitize financial services and currencies and securities and things like that.
And this question came from Edith Campos, and it's a very interesting question that any of you or both can answer. How are laws adapting to the cryptocurrency when it comes to money laundering, anti-money laundering, no? Since digital currency is getting more popular? Your view on how regulators are going to adapt to the new environment?
So, do you want me to answer?
Please.
So look, regulators always go behind technology, and this has happened everywhere in history, right? So you can't expect regulators that are there to protect, the system and protect the consumers to be, as up to date as technology happens. So if you look at what has happened in cryptocurrencies the last, let's say, 5 years, it's always been regulators have been trying to play catch up to adapt to the new things that happen, and this is exactly where we are today. So in terms of anti-money laundering, if you ask me, what do we do today? We just apply the normal anti-money laundering rules to crypto or to digital securities, even though they're not designed to do that, but we just try to use what's available. And then people are coming up with new ways of, let's say, tracking cryptocurrencies and understanding whether cryptocurrency has been used for ransomware or things like that. But the law itself has not necessarily changed. And slowly but surely the regulators are kind of adapting to this new environment. And recently, like this week, we had news that now banks are allowed to custody cryptocurrencies for the first time, which is going to be revolutionary. And Bitcoin went from $9,000 to $11,500 in a week as a result of that. And FinCEN had the travel rule and things like that are traditional services, financial services rules that are now applied to cryptocurrencies, etc. So I think that the regulators are kind of playing catch up. Sometimes they are behind, and this is where things happen that then the regulators try to stop, like it happens with the ICOs, and it's going to happen now with DeFi and all these new trends that are happening. But unless they adapt, people, because this is a global initiative, right? So cryptocurrencies are global; they don't belong to any country, and they're decentralized by nature. If one particular regulator in one country doesn't adapt to it, people just go and do things in other country, right? So that's the current situation.
One thing two things I will add very quickly. Not only regulators are catching up, but also many industries are catching up. Many industries and companies are catching up, which is why there's a tremendous opportunity for fintech. That's one point. The second one is, this is one example, but there are several others in which current technology movements are challenging the status quo of regulation and businesses. And one of my favorites that I used in every single conversation is the entire payments industry was based on this concept of card present or card not present. So you either showed your card and paid an establishment, or you paid online. But now we have a growing number of businesses in which the card is not present, but the consumer is present. So think about on an Uber ride. You don't show up your card, but you are in the car. That is another one, and we can go with on and on and on examples in which technology and applications are challenging status quo for both regulators and companies. And because of that, creating unique opportunities. You mentioned the point earlier, Alvaro, about the job for many of those that are participating in the call are not even invented. That is true, and it's happening as we speak. All of those things are being developed as we speak.
Thank you very much, Carlos and Ramon. This question is for Israel, comes from Jane Whittle. Do you see the machines taking control of Wall Street?
Well, in fact, they are doing. Why? Because, for example, JP Morgan, they have said that right now only 10% of the stock picking is done by humans. 90% now is done by computers. So we are watching a change in the trend, because now, for example, a human can't compete to a high-frequency trader or trading a firm or shop. So yeah, computers are taking control of the market. There's a study from Bloomberg, I think so, that they are predicting that 99% also of the pension funds will begin using this kind of technology to select the portfolios. So yes, the landscape has changed.
Thank you very much. Luis Camacho has sent a nice question. It's about, what are the careers of the future for fintech? What knowledge should people be acquiring to address these needs? I'm going to answer this question, if you don't mind. Okay.
Please.
Now most of the business schools are launching fintech courses. Harvard, MIT, Stanford. Finally, if you Google into the internet, you will see that now is one of the topics in trend, fintech courses. In my opinion, you have to have both a knowledge about the technology and a knowledge about the industry. If you have both together, you will be successful. And probably how you mix these two different things, no? The technology and the banking or finance knowledge. I don't know if you want to add anything about this to answer this question. Please,
just one comment that you have defined a quant, a person that has financial knowledge, that maybe he studied mathematical finance, that has computer science knowledge, specialized in artificial intelligence, for example, and that maybe also he knows how to program. So you define perfectly the career of the future. That's why I was saying that many of the future jobs have not been created.
So can I add something else?
Yeah, of course, Carlos.
Don't study finance, because if you study finance, it's very difficult to be a good mathematician or a good computer scientist. If you study computer science or math, it is not that difficult to learn the finance side of things. So if you look at all the successful quants in the world, like Jim Simmons or like the famous ones from Renaissance, they're not finance people, they're mathematicians or they're computer scientists. And if you look at all the fintech successful entrepreneurs, they're not finance people, they're technologists that then learn the finance side of things. So if I agree with you, Alvaro, that you need to know both. But one is easier to learn when you're older, and the other one is easier to learn when you're younger. So you gotta pick which one to learn. I would say start with a complicated one when you're younger, and it's easier to study and remember things.
Thank you very much, Carlos. Well, this question is for Ramon. It's about what is the new technology that is having the most impact on payments?
Wow. There are many, but if I are to look at a few that are having a tremendous impact, big data and deep machine learning is having a tremendous impact on payments in terms of the way in which new consumers are brought into the payments industry, as well as how some of the drivers of the business are controlled. But in some cases, what is considered as relatively old technology and certainly not very fancy, we haven't spoken about it, is taking a major role right now. Near field communication, NFC. That is a relatively old technology that hasn't been at the forefront of payments for quite some time, but now wallet applications through the mobile antennas or even cards are using this technology, and a situation like COVID is actually forcing this further. So there's not a single technology that is having more impact than others, because different parts of the ecosystem, the payments ecosystem, are being challenged by both relatively legacy technology, but also a new technology that is coming. So Juan, I know I didn't give you a definitive answer because there are many.
Thank you very much. A couple of questions because I'm conscious of time and I don't want to extend a lot this session. For Israel, let me see. I think that this is for you. What's your view on the fintech ecosystem in Miami? It's a question specifically about Miami.
Well, we have been watching a lot of initiatives. For example, event called Miami Fintech Festival. It's sponsored by Emerge America, Finovista, Lab Ventures, Visa, Refresh Miami. So there's a lot of activity. Before COVID, it was a lot of activity. Meetup groups. So we hope that for next year we'll get back on track. But there's a lot of groups disrupting the industry. So we hope that we'll begin watching these companies growing and getting funding to develop their products and launch, basically.
Thank you very much. And finally, the $1 million question. This is for Carlos. And I'm sure that your wife is tired of listening to this question in any party or any dinner. What's your view on blockchain, but not blockchain, on Bitcoin and on Ethereum in the long term? What do you see? What is going to happen with these two current cryptocurrencies?
So Bitcoin, I definitely think is going to be around, and it will be the winning, if you want, cryptocurrency on a long-term basis. It is very difficult. There's no really alternative, and it's very well established. It has the largest market cap. It has the network that has been running the longest, etc. Ethereum, I don't know. Because Ethereum is actually a very different infrastructure, right? It's not a cryptocurrency, even though there is a cryptocurrency that people use to pay for the transactions. But the main purpose of Ethereum, it is actually to run, if you want a distributed computer where you can run transactions, and it's a smart contract platform if you want. And Ethereum has proved the last few years that it is very inefficient, it's very expensive to use, and the team that runs it doesn't seem to get their act together in terms of improving these things. And there is like 20 different alternatives of platforms, Algorand, Solana, Tezos, etc., that are trying to replace Ethereum. And unless Ethereum fixes things, which so far they haven't proved that they're up to the task, somebody will replace them. Bitcoin, I don't see any other alternative. So I'm definitely more bullish on Bitcoin in terms of a long-term viability. Ethereum, everybody that uses Ethereum, as including, is thinking about how not to use Ethereum and what is the alternative to Ethereum today. But I don't see that with Bitcoin. If you buy Bitcoin because you believe in Bitcoin. And what else are you going to buy that gives you the same properties as Bitcoin?
Thank you very much, Carlos. Well, it's time to close. I think it has been very useful. We have listened to our speakers talking about the most important technologies in the finance industry, about artificial intelligence, about how digital payment are going to change from cash to new technologies, and about blockchain and its use in the financial world. Thank you very much, Ramon. Thank you very much, Carlos, and thank you very much, Israel. We have learned a lot from your presentation. And now I will get back the screen to Rana, who will finish and close the webinar. Thank you very much.
Thank you very much, Alvaro and Ramon and Carlos and Israel, for this amazing information that you shared with us today. The content has been very beneficial, very inspiring, and very thought-provoking. Here at Miami-Dade, we spoke a little bit about the skills needed in industry. No matter what industry you go to, it's very important to have a fundamental, deep foundation in your area of study, but not stop at that. Continuous knowledge and growth and learning, and listening to webinars and events like that from thought-provoking leaders in the industry is key to always keep your mind fresh and keep on learning and bringing in various different skills together to make you competitive in the marketplace. So I hope, thank you again for joining us, and I hope you found the information beneficial and allows you to contemplate what the future might bring and how it affects what we do, how we behave, and how businesses operate. I hope that we will see you again in future events, and that we will see you at our new program in investment and wealth management, which we will be embedding a lot of these topics that what you heard today in the curriculum through our special topic seminars. So you can count on us at Miami-Dade for any of your educational needs. And if you got any questions around anything we covered today, please feel free to reach out to us. And Chechu, thank you again for putting all this together. I hope I hear from you in the future, and I see you at Miami-Dade College. Please stay safe, and best of luck.